Hello everyone, welcome back to your own channel, that is Commerce and Management Hub with SK. Today we are going to the next part of the national income. We are going to discuss about the methods of national income. So when we are talking about the methods of calculating national income, there are three methods of calculation of national income, that is value added method, income method and expenditure method. So we will discuss all the three methods one by one in each respective video. So in this video we are going to discuss about the value added method. Value added method is also known as product method or industrial origin method or net output method. Let us discuss the meaning of value added method. Value added method is also known as product method. Under this method, the sum total of final goods and services produced in the domestic territory of a country is calculated to find out the national income. Now, let us discuss the procedure of calculation of national income through value added method. So the step 1 will be classification of sectors. So we divide our entire economy into three sectors, that is primary sector, secondary sector and tertiary sector. Primary sector is also known as the sector where the agriculture, mining, fishing, extraction of raw material, these kind of activities are done. Whereas under the secondary sector, the manufacturing work is done, and under the tertiary sector, it is also known as service sector, and the services like banking, insurance, all these are provided. So firstly, we will classify our economy into these three sectors, and value added in all the three sectors will be calculated to calculate the total value added of the economy. In the step 2, we need to calculate the value of output, and when we are calculating the value of output, we are confronted with two cases. The first case is when entire output is sold, and the second case is when entire output is not sold. So if the entire output is sold, value of output will be equal to sales. It means whatever you have manufactured is sold in the market, so your value of output will be equals to sales. And the second case is when entire output is not sold. It means our entire production is not sold and some stock is there with us. So value of output will be equal to sales plus change in stock. Change in stock refers to closing stock minus opening stock. Now the step 3, we need to calculate the intermediate consumption. Intermediate consumption refers to the cost of raw material used in the process of production. All those inputs, the cost of those inputs which we use in the process of production is known as intermediate consumption. Now the step 4 is that how should we calculate the value added. Value added is also known as GDP-MP, that is gross domestic product at market price. So when you will go for the value added method, you will get GDP-MP. So GDP-MP is equal to value of output minus intermediate consumption. So the formula of value added is you have to firstly calculate the value of output, then you will deduct the intermediate consumption from this value of output and you will get the GDP MP. For example, sales is equal to 1 lakh, cost of raw material is equal to 30,000, closing stock is 5,000, opening stock is 2,000. Then how the value added or the GDP MP will be calculated? Firstly, we will calculate the value of output. So it will be sales plus change in stock. Change in stock means closing stock minus opening stock. So 5,000 minus 2,000, change in stock will be 3,000. So value of output will be 1 lakh, that is sales, plus 3,000, that is change in stock. So the value of output will be 1 lakh 3,000. Intermediate consumption is 30,000, that is the cost of raw material. So the value added will be value of output minus intermediate consumption. 1 lakh 3,000 minus 30,000, that is 73,000. Now step 5, that how to calculate national income. Because under value added method, by applying the formula, we have GDP MP. So now to calculate the national income, that GDP-MP has to be converted to NNP-FC, because the formula of national income is NNP-FC, that is net national product at factor cost. So in the earlier video I have told you that if you want to convert gross to net or domestic to national or MP to FC, what formula should be there. So GDP-MP is to be converted to NNP-FC. So at the first place we have to convert gross to net. So we will deduct depreciation. Then we have to convert domestic to national. So we will add net factor income from abroad. Then we have to convert MP to FC. So we have to deduct the net indirect taxes. So GDP-MP minus depreciation plus net factor income from abroad minus net indirect taxes will be the national income, that is NNP-FC. For example, if the sales are 1 lakh, intermediate consumption is 40,000, opening stock 10,000, closing stock 5,000, net factor income from abroad, that is NFYA, is 10, depreciation is 20, and net indirect taxes are 200, then how the national income will be calculated? Firstly, we will calculate GDP-MP. So the formula will be value of output minus intermediate consumption, and value of output refers to sales plus change in stock. So 1 lakh plus change in stock means closing stock minus opening stock, 10,000 minus 5,000. So 1 lakh plus 5,000, 1 lakh 5,000 will be value of output, and intermediate consumption is 50,000. So 1 lakh 5,000 minus 50,000, GDP-MP will be 55,000. Now how we will get NNP-FC? We have to deduct depreciation, add NFYA and deduct net indirect taxes from GDP-MP to get NNP-FC. So 55,000 minus 20 plus 10 minus 200, 54,790 will be our NNP-FC. So a quick review of the entire method. Firstly, you have to calculate value of output. Formula is sales plus change in stock. Change in stock means closing stock minus opening stock. Then you have to calculate intermediate consumption. The difference between value of output and intermediate consumption is your GDP-MP. Then you have to calculate NNP-FC. So GDP-MP minus depreciation plus NFYA minus net indirect taxes will be your national income, that is NNP-FC. So this is all about value added method. In the next video, we will discuss about the income method and the expenditure method. Thank you for watching the video. If you like it, kindly like, share and subscribe. Give your valuable feedback in the comment section. Thank you.